And we are live, Dividend Growth International. This is a live stream every Sunday at 11 o'clock a.m. Pacific Standard Time. And Torsten, what time is it your place? Is that 8 o'clock?
8 o'clock, exactly.
8 o'clock.
Summer here on the northern half of the globe.
Okay, my name is Chad Lupkes. I'm in Seattle. Torsten, you're in which city again?
Still Frankfurt.
Frankfurt, Germany. All right. So we are going to talk about the semiconductor manufacturing industry today. This has been in the news a little bit. But first, let's do introductions. This is Dividend Growth International. We talk about dividend growth stocks without looking at international borders. We know the majority are in U.S. stock markets, but we're not going to ignore good opportunities outside of that. We have one Facebook page. I am focused on total growth investing. That's my tagline. And I've got a Facebook page and a YouTube channel. And Torsten, why don't you introduce your own stuff?
Yeah, I'm the founder of Dividend Stocks Cash or Aktienfinder.net, depending on your mother language, probably. And I own a YouTube channel as well, a Facebook site. And yeah, I don't know where you are watching from, either from YouTube channel or from Facebook. Doesn't matter. That's my introduction. You will meet Dividend Stocks Cash because we are here speaking English, and enjoy the show.
Okay. So a big question that I saw in a lot of groups and a lot of discussion about is what happened to Intel this week. And that is what prompted our research to try to put this show together. Intel stock plunged by like 16%. And the reason why goes into the details of semiconductors themselves and Moore's Law and the fact that this is a competitive market. But we wanted to dig a little bit further into it. Intel basically said that their process and their equipment to be able to produce 7 nanometer chips has been delayed 6 months because they found a flaw. They failed to detect a defect mode in the manufacturing process. So they did a little bit of reorganization, and one of their top executives who had been brought on from Qualcomm, who was in charge of this process, is no longer in charge, and all of the different teams within Intel are now reporting directly to the CEO. This was so that they could get the board of directors and the executive team could get a handle on what was happening and get things back up to speed. I also wanted to talk a little bit about Apple because we had one question early from Lance that I will bring up. What do you think about Apple? We're not going to dig that far into it, but I did want to bring up this article. Apple reportedly plans to ditch Intel in their Macintosh computers, in their Macs. And that is a big deal. But Intel is a semiconductor manufacturer. Okay, they build the chips. What we're going to be talking about today is the companies that produce and create the machines that make those chips. These are the suppliers for Intel, Qualcomm, Broadcom, and all of the other companies. So we thought that was important. And we wanted to start just really quick comparing Intel with AMD because Intel's delay of the 7 nanometer chips by 6 months puts AMD in the lead. In fact, they already have some 7 nanometer chips coming out on the market. And hi, Debbie. So this is an important thing. If Apple chooses to make their own chips or go somewhere else for chips instead of Intel, where are they going to go? Well, it's not a small ecosystem. It's actually quite huge, but it is a defined number of companies that work in this industry. So we'll be talking about that. Let's go to a portfolio visualizer, and you can see that, okay, I used portfolio visualizer, did a back test for 20 years.
Chad,
I'm comparing.
can you increase the screen by removing our faces? Exactly.
There we go. So I did a comparison between Intel and AMD, and this is how they compared. This is how they came out. If you'd put 10,000 into Intel in 2000, you would now have 18,205, compounded annual growth rate of 2.95%. If you'd done the same thing in AMD, you would now have 53,515. That's 8.49%.
On the other hand, Chad, you see that there's a really high volatility on the AMD stock.
There is.
While Intel, the volatility is much lower. And in the long run, Intel is also going into the right direction. So you can see capital gains. Maybe you can zoom in the comparison a little bit, because it might still be small, the picture. Yeah, exactly. So
all right, so this is the growth. And what I really wanted to point out is that the market knew something was up. Okay, we're looking at August 31, 2019. And the blue is Intel, the red is AMD. So starting last summer, Intel sort of went stagnant. They're not quite going up, they're not quite going down. This is sort of going sideways. But AMD shot way up. So most of the gain getting AMD up to that 53,000, which I could get to, whatever. This 53,000 is over the last year. And it's almost like the market predicted this quarter two announcement, that it was already priced in. The advantage that AMD has, thanks to whatever delays are happening within Intel's manufacturing process. I found that was interesting.
Can I share my screen? I have just the market share comparison between Intel and AMD here. Wait, I'm sharing my screen here. I will have to do it anyways. Yeah, exactly. That's it. And what's interesting, and this matches with the stock price, is that the blue line is the market share of AMD, and inverse, the black line is the market share of AMD, and the blue line, the market share of Intel. And you see that Intel is still the market leader. They still own about 2/3 of the complete market of CPUs. It's only about CPUs, not about GPUs, because Intel or AMD, sorry, I am confusing already both these. AMD also has a very important segment, which is GPUs. There they are competing with NVIDIA, and this is only comparison between CPUs. And here you see that very late here in the third quarter 2019, it was a very good quarter for AMD, and there their market share skyrocketed from 23% to 31%, about 8%, and that's very much. That never happened before, at least not starting from the year 2012. And that's also, I think, when the stock price, or when Mr. Market recognized that there is something. And even some quarters before, the stock price went up, but we don't need to forget that AMD's performance for a very long time was lackluster, both in the industry and both on the stock market, which mirrored the industry performance. The stock price on AMD back in 2017, what was it, $2 or even lower? I don't remember.
I don't have that up either, but I could see that in the graph that I showed, that the stock price dropped way down and then came way back up.
We can see it right now, right? Here of the it was in 2015, sorry, 2016, still beginning of 2016, when the stock price was below $2. So we are coming from a really low level and then going up. And Mr. Market already recognized that AMD is strengthening. You see it here, sometime before the really market share gains happened. So in this period, no real solid market share gains happened, but the stock price already went up. So Mr. Market recognized it early enough that AMD has a strengthening in his position. Okay, that was AMD from my part.
So these companies buy from a particular list of equipment manufacturers. So, Torsten, why don't you present yours first? Because we've got 5 that we want to highlight.
Yeah, exactly. So as Chad already said, we are talking about equipment manufacturers. So it's the companies enabling the companies like Intel, for example, also, but on first-hand fabless companies like AMD or NVIDIA to sell something, because these companies are fabless, so they don't have the possibility to produce anything without help from other sources like TSMC, Taiwan Semiconductor, and Taiwan Semiconductor in turn is buying some of their stuff, at least from other companies. So the machines, all these advanced things. And on Dividend Stocks Cash, we have the most important companies in the industry, which is called semiconductor equipment. And we want to give you a look about 5 or 6 companies. I will present 3 of these from a fundamental point of view, if it's a promising investment or not, and Chad will look at the remaining ones. And we start with Lam Research. Or before we start, I want to give you an overview if the semiconductor equipment industry is an interesting industry. And we can just take a look at the matrix of these companies to get an idea if it's worth digging deeper. How can we do that? Just looking at some matrix. If you look at the market capitalization, for example, we already see that it's not the smallest companies. It's, I would say, mid-sized companies with market capitalization starting from 30 billion US dollar till 150. And if we add Taiwan Semiconductor, then we have a really large one of the most valuable companies in the world with more than 400 billion US dollar. I know that Amazon and 2-3 other companies are worth even much more, but it's still a big one with more than 400 billion US dollar. Then you see here, I think interesting for any one of us, that all of these companies pay dividends. That's not obvious in the semiconductor industry. Think about NVIDIA or AMD and some other stocks. They don't pay dividends for a good reason, because they need to preserve their cash flows. And then we see here that the dividends are paid reliably. We have already some years of dividend increase, even more years dividends did not increase. I'm not going into detail here, but you see that the numbers differ from 0, obviously, starting from 14 to 5. Let me give you a better vision of the cursor here with the yellow dot. And then, which is also very interesting, we have already double-digit growth. At least we had in the long run of dividends. So yearly dividend increases depending on the company. You look at between about 20 up to even 40% of dividend growth each year. That's very nice. That compensates for a rather low dividend yield starting from 0.8 to 2%. So, and then we have this metric called dividend stability. In my point of view, an important metric. and the maximum value of this is 1. It ranges from -1 to +1. +1 is the best. And here you see that the numbers are more or less close to 1, starting from 0.79 to 0.94. So it's, you can say, reliable dividend payers we have here in the semiconductor equipment industry. And then we can continue. We know that dividends are not financed but from themselves, but from profits, earnings, and especially cash flows, because the dividend outflow is cash, so it's very important. And without going too much or too deep into the details, just look at the stability of the earnings. It's also rather high. Cash flows also rather high, and the same with the revenues and all these increase rates. So I think it might be an industry, the semiconductor equipment industry, worth this session here. I hope you agree. And then we can start with the first stock. And the first stock is Lam Research. And it's a US stock. Its market capitalization is 55 billion. And I think the website of them is very interesting. And I will just open it and give you a look. And here they explain you that we are all living in the Matrix. If you haven't seen the film with Keanu Reeves, then you see here, this is the Matrix. And only this nice woman and some trees are outside the Matrix, and anything else is stuffed with some little chips doing something, talking to each other and all that. And in our life, with the megatrend digitalization, anything is somehow electric today. And what Lam Research and KLAC, Tencor, Applied Materials, and the others are doing, they are enablers of this megatrend of the digitalization. Without them, there would be no progress either, or the progress would be slowed down considerably. So let's have a look at Lam Research from a fundamental point of view. When I do that, the most important charts are these ones, in my point of view, because this one is the per share matrix of earnings and cash flows and also of dividends. If this doesn't go up from down left to the upper right, then something goes wrong, and maybe it's not, or probably it's not a good investment, or at least not a good long-term investment. What's obvious here is that we have a cyclical stock. Why? Because you see these two red areas here during the burst of the dot-com bubble first, and then during the financial crisis, and then also downturn cycle here between 2012 and 2013. I will come up. Yeah, Chad, you want to say something?
Yeah, I think one of the important aspects of semiconductors and all of the engineering things is we're looking at the cycles between research and development, engineering, and finally product development, product production. The two periods of time that we're looking at in the red there are probably when the research and development phase was high, and that takes a lot of investment, and then they started to produce actual goods that could be sold.
This is a theory.
Yes.
And I can already say you that the theory is not, at least not at 100% correct, because if you are making a lot of research, then the operating margin goes down. That's right. That happened here and that happened here. But if you do a lot of research, the revenues won't decrease or decline. And that's exactly what happened in these down cycles here, when the revenues dropped from 0.5 to less than $1 billion, 0.5 to 940 billion. And then the second down cycle from 2.5 billion to, it more than halved, revenues more than halved from 2.5 billion to 1.1 billion. So that's really, that obviously the demand decreased during the down cycle. So this is a cyclical problem we face here. While this one is another thing. I was just looking some minutes before the stream started what happened here, because obviously we hadn't a down cycle here from the economic point of view, but anyway, both cash flows and revenues, they took a hit. They took not revenues, operating cash flows and earnings, sorry. While revenues went up, but the margins went down. And I was reading that Lam Research was buying a company called Novelus Systems in this time. And this declining operating margin, this is a digester. How do you say? They needed to digest the company. You can also see that they bought a company. If you look at the most important aspects of the balance sheet, and you see that the goodwill here considerably increases from less than $200 million to $1.4 billion. And of course, you can already imagine that debt also increased from 1.6 to 2.9 billion US dollars, so more than 1 billion US dollar additional debts. And to finance it, it was not enough to make new debts. They also made a capital increase, and the number of outstanding shares went up from 125 to 173 million, about 50 million shares, to finance this acquisition worth 3.3 billion US dollar. And I think that was this phase. They needed to incorporate the new company, and obviously it was hard work to do. You can see it with the operating margins, but finally it was successful, and since then the operating margins increased. And you can see the result here also from in the earnings per share matrix, that the earnings per share and also the cash flows per share really became a boost. So the acquisition was successful. If we look at these increasing debts, you might get a strange feeling in your stomach if it's too much. And to find out, just look at the amortization power. And if we see this, that's the free cash flow minus dividends paid. And if there's the money which is left could be used to pay back its debt, interests are already paid. They are already paid before the free cash flow. And then we see, for example, here, latest data that the amortization power, so the floating money, the money left to pay back your debt is 1.3 billion nearly, and the total debt is 9.4 billion. So they have no liquidity problem right now. They also have cash, and they have a lot of cash. Look at that. I'm surprised. I didn't know. I was just making a rather short analysis of this stock, but look at the cash. They have 6.7 million cash in the company, including short-term assets.
Well, that means the dividend is safe.
Sorry?
That likely means the dividend is safe.
Yeah, the dividend is safe. You can also look at this. Here you see that the free cash flow is much, much higher than the dividend paid. So we don't need to worry about the debt. And they have some goodwill, but it's not too high. Then they also have treasury stocks. Look at that. So they have more treasury stocks than the company is worth. Basically, I want to say that the balance, the amount of the complete balance sheet is less than the amount of the treasury stocks. Okay, you can also see here that they bought back a lot of stocks. I just make this analysis a little bit deeper, and the other ones will move ahead faster, I think. Otherwise, we are still there on midnight. You always see that if the number of treasury stocks goes up, so here, starting in 2018, 2019, then the number of outstanding shares goes down. Now that mirrors exact, and that's obviously a good thing for the investors this time. I'm with the management that they can buy back their shares. Why? Because the stock price went up. We will see this in just a moment, and they can afford it to buy back their shares, and now they boost the earnings per share. So for here example here in 2019, business year 2019, its business year ends in June. They boosted the per share earnings per share by $1 58 cents. So we need to say that this stock is not very cheap. It's nearly as expensive as Apple right now, close to $400. So if you want to buy this, you need a little cash. Okay.
We had a
then,
comment about that we can show really quick. Son of the Sun 74, semiconductor shares are too expensive these days. Yeah, they are up there.
Yeah. Not only semiconductor, you can say a lot of tech stocks are very expensive these days. But I think that's, if you start discussing this subject, then it will even continue up to tomorrow, this live stream. We have on the one side the classic dividend stocks, and they are partly nearly ridiculously cheap. And then we have the tech stocks, and they are very expensive.
So, Torsten, you have two more to go through.
Okay, just let me still give 2 minutes to include the valuation of the stock. Where do we start to value the stock? We start in maybe 2010 already. We use the historic averages of different multiples like price earnings, price cash flows, and even the average dividend yield, if it makes sense. Let's see what happens right now. If we add all that, then we see that the fair value based on the reported earnings, they have some outliers, so we get rid of them and add the logarithmic. And then we see that Lam Research started paying dividends in 2014. You can see it also here. And then they really boosted dividends in 2018 when they also started really buying back shares. So obviously management thought, yeah, we got it. When now we can afford both buying shares, buying back shares, and really paying dividends. So management obviously is really optimistic about Lam Research, but that also means that we need to get rid of the fair value dividends because the dividend history is not very smooth. Then what remains is a fair value based on adjusted earnings and on operating cash flow. And let's zoom in a little bit, and then we have different phases of clear undervaluation. For example, in the end of 2018, at the end of 2018, with a general stock drop in the stock market, but then the stock was clearly undervalued, and now we have an overvaluation. Unfortunately, so the commenter was right. And the stock price, as I said, close to $400 $380. And the fair value for the latest data is somewhere close to $200 only. And at least, depending on the optimism, not only of the management, but also from the analysts, the fair value will increase and will come close to $300 for the current business year, and even up to $350 1 year further. But right now we have really an overvaluation of the stock. The stock is really aggressively priced, like unfortunately so many. But to sum up, I think it's a high quality stock, Lam Research, and They really have a nice run right now. They had some problems in 2012, 2013, but don't forget, it's a cyclical stock. You have the proof. So it's just a question of time until the next downturn comes. And I don't know if it will happen because of the corona pandemic or somewhere later, but you should be aware about this. Okay, Chad, do you want to make one stock of yours and we change? Because otherwise I talk and talk and talk.
Sure, I can do that.
Okay,
So
should we?
let's talk about, okay, you're doing these three, and let's talk about ASML. So ASML Holding is a global leader in lithography. They are based in the Netherlands. They're not a U.S. company. They were started in 1981 as a joint venture between Royal Philips Electronics and Advanced Semiconductor Materials, and which is now ASMI. And then in 1988, ASM sold their 50% share to Philips, and then they went independent in 1995. Their IPO raised $170 million. Let's take a look at their website. And like you said on Lam Research, everything is data. They have a really good timeline on their website. I did a full review. I don't want to spend a whole lot of time on that here. But I'll just refer to that other video. I do want to take a look at the price and what has happened over the last 10 years. This is from Seeking Alpha. I will get to dividendstocks.cash at the end, but this is the price in orange and volume. They had a lot of volume here. I wonder what that spike was, but you can see that they've recovered and then some from the coronavirus crash, which began in February. I'll look at this more in depth when I can get a dynamic map up. Let's look at their dividend growth. Their dividend growth over the last 5 years has been really nice, and that's because of this jump between 2017 and 2018, from like $1.60 to $3.20 or $3.40, and that's annualized. These are annualized numbers. Their total return has followed the price, and total return is also price plus dividends. So this is a wonderful graph to see for any investment. This is 10 years, 876.91%. And okay, let's go to dividendstocks.cash. I will bring that over so we can do the same analysis. This is ASML. Let's see.
Can you click again? I think you resized the screen, and now the charts are a little bit too small. On the right, there's blank. Just reload the charts by clicking again on the row of the stock.
Okay, yeah. You might be seeing something. Okay, let me click the row again.
Mm-hmm.
Is that better?
No, yeah, now it's larger.
Okay. So let's take the payout out because that they had a big spike at the very beginning. Let's limit it. Okay, I can't do that on this one. I'm not going to go into as much detail as Torsten does in here because he's much more familiar, but I did want to bring up the goodwill because this points to some major acquisitions that they had. You can see a major jump in 2012, 2013, and that was they announced the acquisition of a number of sources, and including the manufacturer Cymer, in October of 2012. So that meant a big investment. And then another jump in 2015 and 2016, and that's because they announced their plans to acquire Taiwan-based Hermes Microvision for about $3 billion. To add technology for smaller and more advanced semiconductors. So what we're seeing in the goodwill is corporate mergers and acquisitions and all of that stuff. and it's really important for a company's growth and for the industry in general. Let's quickly go to valuations. So you can see that this is another company that had a major spike because this is basically the tech bubble that we're in. We don't know. But this is the COVID crash and then the recovery. And right now they are sitting at about 299.70. Let's limit it to 10 years. Let's isolate out just those numbers so we can see what might happen. These are the estimates. Let's see. Those dividend spikes are a little bit distracting. So we'll take those out.
There's a special. Is it a special dividend? There's a lighter blue, I think.
Yeah, you can see that. So they had
Okay.
regular dividends and then the specials right here.
Mhm.
Estimates can't show that because we don't know what might happen. But we can see that even though the price right now is $299.70, it's overvalued today, but we don't invest for today. We invest for tomorrow. And in theory, according to the estimates, if we invest it right now, let's give the middle number here, we might see a capital gain of 150 with 24 in dividends, 24.47. So that's just after 2 years. After that, who knows? So there's a quick overview of ASML, and I will give it back to Torsten to present the next one.
Okay, I'm coming. So here I am again. So your stock was better than mine, huh? It was better than Lam Research, depending on fair value. Okay, I will come up with the next. We will see if I can beat you, Chad, with KLAC Corporation. And when I made some research just some minutes ago, then I was reading that this is a misnomer. It shouldn't be KLAC Corporation. And then because they made a rebrand, and then I watched the website, and on their website there is still KLAC Corporation. So I don't know what's going on with this company, because they probably, but we know we are talking about KLAC Corporation. And they are a little bit smaller than Lam Research regarding the market capitalization. And it might be nice to know, Chad already showed you with his goodwill, and I showed you goodwill. So it's obvious that in the semiconductor equipment industry, their management is buying like crazy, obviously. And Lam Research, in fact, tried to buy KLAC in, when was it? Back in 2000, took a note. No, I don't know when it was. I think it was in 2015 when Lam Research tried to buy KLAC, but it did not succeed because there were some concerns about regulation. So the American administration in general, they didn't want that, and so KLAC, you can still buy the shares. Otherwise, it would be integrated into Lam Research. Okay, let's dig a little bit deeper here. Current dividend yield 1.7%, not so much, but they also pay special dividends sometimes, the same as, which stock did you present? ASML Holdings. So let's have a look at that. What happened here with the earnings? And you already know. Is it a cyclical stock? Yes, it is. In 2009, they posted losses, but in 2003, they did not post losses as Lam Research did. And in my point of view, if I look at this, then it's less bumpy, the earnings and operating cash flows, than Lam Research. Lam had a better run starting in 2017, 2018, but KLAC is much smoother from a fundamental point of view than Lam Research. Looking at the revenues and margins, we see this decrease in the operating margins. It was the same for Lam and also in 2003. So it's the cyclical downturn here. And then we see here nice revenue increases and overall more or less stable margins. Operating margins about 28%. Let me look at Lam Research. Small comparison about the margins. Lam Research 26, 27%. So it's exactly the same from the operating margin point of view. And again, goodwill. So they bought a company during business year 2019. I took a note. It was most probably an Israeli company called Orbotech. Never heard of them, and I will never hear of them again because they don't exist anymore. So that's the game of this industry. Obviously, the bigger one buys the smaller one. And we have here also amortization power of nearly 1 billion US dollar and debt of around 6.5 billion US dollar. In short, dividends are not in danger. We also see it here from the free cash flow. Here we have no estimates for the free cash flow, obviously, but we have the last 4 quarters and it all looks fine. And increasing operating cash flows are a very strong indicator that free cash flows will increase as well. Okay, then let's have a look at the number of shares. So the company is also buying back shares, but after buying them back, they destroy the shares. Because of this, we don't have treasury stocks here. And then valuation. I guess the stock will be overvalued. Let me have a look.
Good guess.
We always see the same pattern. Independent of the stock we analyze, it's always the same. So this boost is independent of the company. Drop of the stock price during the Corona crash, which really considerable drop from 174 to 114 US dollar, and then the recovery and even more new all-time highs.
Somebody got really lucky at that between those 2 points in time.
Exactly. And I was really unlucky, Chad, huh?
Yep.
The people who sold here. Okay, let's look at the valuation of the company. And then here you see the multiples, how they changed from 20 to 8 to 10, 15, above 20, back to 30, even below 30, and whoop, again 20. So really a big change of the multiples. And we probably will see here strong periods of over and undervaluation with the stock. Here it is. And again, I remove the fair value based on the reported earnings because it has more outliers. And then we see here phase of clear undervaluation, overvaluation. Here, the stock was fairly valued from 2015 up to 2018. And then we have a phase where the fair value calculation becomes a little bit more difficult because earnings and cash flows considerably differ. I show it to you. So while the adjusted earnings go up, the operating cash flows decrease. That always makes the fair value calculation a little bit difficult, because you need to decide now which fair value to prefer. And for this, you should dig a little bit deeper, as we do right now. But the good news is that's already in the past, so it might not be that interesting to do, because this is the most interesting aspect. It's the present and then the estimated future. So the fair value right now is about 150 US dollar of the stock, and all-time high 200 US dollar. Who bets more? And then fair value won't change in the course of the current business year because cash flows and earnings won't increase. they remain flat, but in the next business year, there could be an increase. And if this happens, the stock is worth 180 US dollar, still not as much as the current stock price regarding to these multiples here. So I just show you, if you don't agree with these multiples, you can just override them. So for example, if you say, no, I don't agree with you, 18 is better, then you make this, and then you see I just changed the multiple of the, well, based on the adjusted earnings, and then you see here that the fair value is above the current stock price for the next estimated business year. But that was just very arbitrary. I just wanted to show you that this possibility, this feature exists for you to use. But right now, the stock also looks a little bit overvalued. Chad, I pass to you. Take the next one.
Okay, so the next one that I want to present is actually going to be applied materials. Let's use fundamentals first. First, let's go to a quick presentation of what they are. They were founded in 1967. They've been focused on semiconductor equipment manufacturing since the very beginning. Let's take a look at their website. They are people focused, maybe. I think that's the CEO. They also have a good investors section on their website, and they've been doing really well, which we will see. Let's see, price and volume, very similar to to the other one, ASML. Here's the COVID crash again, and they have recovered. Dividend growth, which is why we're here. They had a massive increase thanks to some really good cash flow here. Yeah,
they have recovered, but they didn't make a new all-time high. So something is not right with the stock.
we'll see.
All-time high. Something is not right with the stock. We will have to find out.
Well, we will. So here's the total return value, and again, it crashed and then recovered. It's not an all-time high again, like he says. Let's take a look at dividendstocks.cash on that. So here's AMAT. You can see that they have estimates going into the future that are much higher. That's nice to see. Solid margins and solid revenue going up.
How high are the current operating margins? The other ones were between 26%, somewhere between 26%, around 26%.
Margin is 23.63 right now.
It's lower than its competitors' margins.
Slightly, yes. So wanted to again show the goodwill, so we can look at some things happening. Let's see, this is 2011 and 2012. So going back to that, they announced acquisition of Varian Semiconductor. Let's see, supplier of ion implementation equipment in May of 2011. And then they tried to merge with Tokyo Electron, but antitrust issues prevented that. So they haven't had any major acquisitions since that point. They've just been focused on their business. They've also been burning their shares and doing stock buybacks. Let's take a quick look at valuations. So this is, let's say all. So you can see that the stock price, ding, 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 go away, everything. Okay, so here's the stock price going back all the way to the beginning of data back in 2000. And they had one heck of a run here, fell back down. Here's the COVID crash. They are currently at 64.33. Let's bring in the earnings, adjusted earnings, and operating cash flow. And you can see that's pretty cyclical, just like a lot of the others that we've looked at. But let's say we want to look at 10 years. And let's isolate out the data from just that so we can bring in fair value. I think I've got another winner here, Torsten.
Obviously.
So
it shows
based on price to earnings ratio, the estimates are that the fair value at the end of 22 is going to be 112.81. And where are we right now? We're at 64.33. I'm not going to use that one. Let's just use this one. Fair value based on cash flow. And that shows still, that's not a bad capital gain for $1,000 invested. 397. That's pretty cool. So that's Applied Materials, and I believe we have one more. Taiwan Semiconductor. Torsten,
that's me again. Yes, exactly. Thanks. That's me. Yes, exactly. I was, by the way, publishing an article about Taiwan Semiconductor. Oh my God! And they say that I'm bearish on Taiwan Semiconductor. That's really my short-term expectation of the stock, because I take off some tension now already. The stock is also, in my point of view, overvalued. In general, Taiwan Semiconductor, they are the market leader foundry, so they are first place in the foundry business. This means they make their revenues by selling semiconductor hardware, which is ordered by companies like AMD, Nvidia, Intel. Also, they will probably even get a better customer in the near term.
We actually had a comment about that from Retire. TSM, he corrected himself later, is not equipment manufacturing. They do contract manufacturing. So
yeah, exactly. Thank you very much. I wanted to make clear the difference. So they are in the foundry business, and maybe I should change this from semiconductor equipment to semiconductors. But I will shortly speak about Taiwan Semiconductor here as well. I am pretty sure that they also develop their own equipment, but they don't sell it. And I think that's also a very big difference. So they are leading edge technology. They have really advanced technology. They own more than half of the total market share by revenue from all foundries. Their competitors are, for example, Samsung, which also has a foundry business, or Global Foundries is another one, but without shares. It's private owned. And if we look at this stock, they are also a good dividend payer. They are really a solid dividend payer. If 2% right now. That's why I also wanted to show the stock to you. And what's interesting is we've already always seen for the stocks before that they are cyclical and that they all posted losses, at least during the financial crisis in 2009. Taiwan Semiconductor didn't. They were always profitable. It was close during the burst of the dot-com bubble with 8 US cent profit. It was close, but they were still profitable. And during the financial crisis, they posted still nice earnings. You see it here. So it was still a very profitable company, even during the down cycle. And now it became even more profitable starting around 2012. Things run rather smoothly. Also, the operating margins are running here. We have a little decrease of the operating margins, but it should be a temporary problem. And then we have the expected recovery of the operating margins. And these operating margins are in general much higher than for the semiconductor equipment manufacturers. We have seen that they had operating margins around 23 to 26%. And this company here has around between 35 up to 40% in the long run. Except the last 4 quarters, there something obviously happened. Possibly it has to do with the Corona pandemic. I don't remember honestly what happened here, but it's only a short-term problem. Basically, much better history of the fundamentals than the stock we looked at earlier. And then we have another maybe problem. If you look at this, we have a negative amortization power, which means that the current dividends are not covered by the free cash flow. You can see it here. And here we have another special situation. We have an artificial dividend increase, which is due to a change of the dividend payment rhythm. So TSMC started paying dividends in 2004, and they always paid a single dividend for the whole year up to somewhere, I think during business year 2019, that changed. Then they paid the dividend for the whole year, and they started paying quarterly dividends, and this sums up to an extraordinary high dividend within this business year. So this is an artificial decrease. But still, we have here the effect that dividends aren't covered by the free cash flow, and there I took a look at, and I can show you my finding about the low coverage of the free cash flow here. So the analysis, and this is taken from TMC's latest quarterly report, and they had extraordinary high investments in which quarter? Here is the CapEx, the capital spending for their investments. And it was extraordinary high here in these quarters, in the fourth quarter 2019 and the first quarter of 2020. You see that here these columns are much higher than, for example, here and also here. And they ask, yes?
So I'm looking at their Wikipedia page, and one of the reasons for the extra cash flow that they lost was due to it was basically a patent war between them and Global Foundries that went back and forth for a while until they finally settled. So that they had to spend a lot of money on attorneys and patent protection during that period.
Yes, okay. But if you look at that, then we have a 5% margin decrease.
Yeah.
We have revenues of $40 billion US. 1% is 400,000? No, what's 1% of that? 405 million US.
Yep.
So 400 million US multiplied with 5% is $2 billion US, and I don't think that TSMC paid $2 billion US for the attorneys, except that if they needed to pay indemnification or something like that. But I don't think that this happened.
Okay.
I don't think that this happened. Anyway, the lower free cash flow here is due to very strong investments. Management said this, and management also said that in the next quarters, their investments will be downsized, and this is why the free cash flow goes up again, and then the dividends are covered again. And they have also cash. Let me look, how many cash do they have? They have cash nearly $20 billion US, and for 1 year they pay about $10 billion US, so they could even pay dividends out of cash for nearly 2 years. So in my point of view, dividends are safe, even if this picture could tells you a little bit or could raise some doubts. Let's have a look at the valuation of the stock. And where should we begin, Chad? Where should we begin?
That is quite a spike. I would say 2008.
2008. I already missed it. I already made 2005. But I don't think that it makes any difference.
Okay.
We can zoom in a little bit and let's show the fair values here. Here we have this change in the dividend rhythm, so get rid of the dividend, but we add the fair value based on the adjusted earnings. And then here you see that it's really a nice stock to evaluate because the fundamentals run rather smooth compared to the other stocks we already analyzed. Especially, it means that the all fair values are very close to each other, except here we have a little lag regarding the operating cash flow, but otherwise they are already very close. Okay, so as usual, here in this time frame, the stock was undervalued. All our stocks were undervalued in 2015 too. Then the first phase of overvaluation from 2017 to 2018, about at the end of 2018, this weak stock market. Then the stock price touched its fair values. And then you see here, starting from this point where the stock was fairly valued, we have the Corona crash, but then it went up. Capital gains of about 133%, dividends included. So really, the stock price took a boost, and obviously, its current multiples are much higher than regarding the historic averages, which makes the stock look a little bit overvalued. And once again, Chad, I have a loser against you because the stock price won't reach the fair value of the stock price won't reach is the level of the ground stock price. So we have this clear overvaluation, and that's why I am here on this analysis. They told me I am bullish, but I also checked that I am bullish on this stock, but only for the near term, or if you want medium term, not for the long term, because I think they have a very strong business. You can see it here, but unfortunately, the stock is very expensive right now. Okay, that was what I wanted to say about my last stock, Chad.
Okay, so one of the things that we wanted to do is talk about the customers, because we're talking about the semiconductor equipment ecosystem, and that ecosystem has a defined set of suppliers and customers. And one of the interesting things that you said is that Taiwan Semiconductors doesn't seem to have, as maybe they're not selling their stuff as much. I beg to differ, and I have the data to show it. Let's see, let me share my screen. And what I've done, first off, I'm going to show off this website really quick. If I can get to the right, there we go. Can we see that? Okay. So CSImarket.com, which I believe you can see. Yes. Let me maximize the screen. Okay, so this is a website that you can plug in a company in the computer markets, and you can see who is buying from them, who are their largest, their largest customers. You can't really see how much they're spending, but it does provide a good breakdown of what kinds of companies are doing it. So customers in semiconductors industry, food processing, what are some of the big ones? Industrial machinery and components. This in particular is applied materials. You can do the same thing with ASML. So ASML Holding. And let's go to their customers. Let's see, industrial machinery and components is also big. And what I've done is I've taken these tables for all of the stocks that we have looked at, and I put them all into one spreadsheet so we can look at them. And I've got these individual sheets sorted by market capitalization, and you can see the ecosystem. You can see the defined set of companies that buy from these 5 particular equipment manufacturers: ASML, AMAT, Lam Research, TSM, and KLAC. And if you bounce back and forth, you're seeing the same names. So Taiwan Semiconductor, Taiwan Semiconductor, Taiwan Semiconductor. And here's Taiwan Semiconductor. Okay, you can see ASML. Here's Texas Instruments, Applied Materials. It's an ecosystem where they buy and sell equipment and technology from each other in order to produce their goods and services. Okay, one of the things that I'm showing, and this is the challenge that I gave, Taiwan Semiconductor, this is the tab for who their customers are, and ASML. Advanced, here's AMD, here's Applied Materials, here's KLAC, okay, here's Lam Research. So they are selling their stuff. And this was really interesting to put together because you can see that ecosystem and which companies are buying from whom. And I wanted to highlight that. This was fascinating research. Also wanted to, okay, we've done that.
Chad, we have a question.
What's the
about
question?
Someone, I will edit here, about an NXP semiconductor. And the question is, how would you evaluate them? We can just...
I can do that really quick.
To make it really quick, yeah.
So let's see. NXP Semiconductors. Go to financials.
I already have it on the screen. I can take over if you want.
Go for it.
Thank you. How do I remove this comment? I already did it. Okay, I already selected it on Dividend Stocks Cash, and it doesn't look too promising to me. Because you see that here, if you have a look at the complete history of the stock, starts getting data from 2007 onwards. And if you remember the other stocks, then you see that they performed much, much better. And obviously, they post losses they already post losses regarding the last 4 quarters, and it will even deepen. So if I just see a picture like that, I already lose interest in the stock. Then we have high goodwill, high risk position, and they started paying dividends, but I don't know if they will really continue paying dividends if they post losses. So to me, it's not a very promising company. Okay, it came back. Can you see my screen again?
Yes.
I have a problem with my.
It's working fine. Go ahead.
Yeah, for you it's working fine, but not for me. What? Wait. Yeah, now everything fits again, and okay, we can do a little valuation, but obviously, in my point of view, I wouldn't continue if I see that, because to me the stock is not really interesting. It might be interesting for the person which asked about the stock, because maybe he knows something I don't know, and the stock makes a U-turn, but I don't know about it, and I already lost interest. So let's make a short evaluation of the stock. We can do it with the adjusted price and maybe with the cash flow here, and then we see that the stock seems to be overvalued. I would take the fair values starting here, because here we have really big deviations, or we get rid of this fair value completely, and then we can take this one, because I think that the stock price, let's add that, because the stock price respected this fair value. You can see it here nicely. And the stock,
to be fair, all of these stocks have been a little bit overvalued, at least for today.
Yeah, of course. If you just look at this, then it's a little bit the same picture as with the other stocks. But you can already see that the current stock price is not on all-time high. Current stock price is $150 US. All-time high was close to 140. So, and the other stocks we mentioned, which had much better performance here from the fundamental perspective, they are already they already achieved all-time highs, and only the stocks with weaker fundamentals haven't. So there's a clear correlation to
So
high quality stocks achieve all-time highs.
a quick follow-up from Sven. He bought it 6 years ago, can't decide if hold or sell. If you go back to valuation, I would say if you bought it 6 years ago,
It was in 2014.
2014, you've got a good deal now, but if you look at the fair value going out 2 years, it will come back up. So who knows what the actual price is going to go, but you're in a good position now. I would wait for the next dip and see what happens. I would not sell right now.
And I'm not making any recommendations.
Okay. So
I'm not cheap enough into this stock.
Thank you for the question, Sven. Let me take the screen back.
Yes.
And I wanted to show one more thing. And then we're going to need to close out. So the entire semiconductor industry, which we've talked about, the ecosystem where everybody buys and sells from each other, there is an ETF, an exchange traded fund that tracks all of this. And it's expensive. It's $166.22. But if you look at their holdings, it's all of our familiar companies. And it's all one single buy. So let's look at their dividends. And they're paying a 1.28%. Consider this the entire semiconductor field. Their growth has been spectacular over the last 5 years, and you can see that. And their momentum has seen the same. Okay, if you're looking at semiconductors and you don't know exactly which one to choose, this might be a good choice because this is the entire industry. I know you don't track ETFs on dividendstocks.cash, but I'm looking at this as another option because a lot of these companies are pretty highly priced. And then just to close out, I wanted to quickly talk about a couple more things. Don't forget downstream players. Who uses these chips? One example is solid state drives. I got a new computer. It's got a solid state drive, and I looked up who does this. The two biggest names are Seagate Technology and Western Digital. And here are some of the brand names that are recently purchased, by the way, by these two companies. And I also did a quick search just for fun. What's the largest solid state drive out there? And I found one from Nimbus Data, 100 terabytes. It's $40,000. I'm not buying it tomorrow, but as these chips become more and more in production with smaller and smaller nanometers, you know, we're going to see that price come down. And 100 terabytes may be tomorrow's. I remember when I bought my first hard drive, it was 30 megabytes. And this was like in 1984. 100 terabytes sounds like a lot today. Who knows what it's going to be tomorrow? But what are the next steps? We've been talking about Intel stumbling at 7 nanometers, while AMD already has 7 nanometer chips out in the market. What's next? 5, 3. We're going to be sharing this because we're running out of time. But these links go to articles that will talk about that. And then what's after 5G? They're already talking about 6G. And 5G isn't even out of the gate yet. So who knows what that's going to happen, but it's all digital.
Yeah.
And then what? What's beyond Moore's law? Quantum computing is one of the aspects, and that's where we take really high tech. The major companies that are involved in that, according to this article, IBM, Alphabet or Google, Amazon, Intel, and a whole bunch of others. But that's not enough. Remember I said we had a semiconductor ETF? We also have a quantum ETF, and this is a ETF that invests in all of the companies that are focused on bringing quantum computing and quantum processors to the market sometime in the next 5, 10, 15 years. Lam Research is one of them. Here's Apple. Okay. this is where the ecosystem is going to continue to expand. So, Torsten, I think we've done an hour and 15 minutes talking about a very important industry in our world civilization right now. It's the information age. But we don't want to continue going for another hour. So I'll let you wrap it up. What do you think?
It's an interesting industry, semiconductor equipment manufacturing, and it's only a tiny or a small part of the overall digitalization industry, or I don't know how you want to call it. We haven't touched all these software companies like Apple, for example. Someone asked about Apple here in the comment. So I think we will also talk about software companies like Microsoft, Apple, and all these other winner companies. But this one with the semiconductor industry is also very interesting. We have seen many stocks with all-time high, reaching all-time high, and some nice fundamentals. Unfortunately, somewhat expensive.
They are expensive, but we are in a bubble. Maybe things will come down to a more fair price. Here's hoping it does. Okay. All right, so this has been Dividend Growth International. We'd like to thank, I've seen the numbers fluctuate. We've got 105 people watching right now. It's averaged about 90, and thank you very much for the interest. Thank you for the support. I will bring up our list of resources again. So please follow our YouTube channels. Please like our Facebook pages. And we will plan our live stream for next week over the next couple days, and we'll let you know what we're going to talk about.
And you also decide, just post some comments, regardless on which channel. We read all of them. We now give us a little bit of time, 1 or 2 days. We collect all your comments, and then we will create next agenda for the next Sunday live stream. All
right. So we will see you then, and enjoy the week. Let's all stay in the green. I'll talk to you later.
Bye-bye. Have a nice evening.